Good afternoon, traders. Hey, this is James with Strategy Vault, and welcome to video number 3 of the continuing educational series, teaching you how to use our system and how it's built. So, like I said, welcome to video number 3. This is continuing on what we have built so far. This is the next instrument that we use to give us a trading advantage in the market. Please stand by for our disclaimer. Alright guys, just take a few minutes to read this disclaimer and understand that you can and will lose money in the financial markets. Per the NFA, the CTFC, and the SEC, we have to advise you of this every time that we put together any information for you. Once again, this is for informational purposes only. We are not professional financial advisors. If you're are looking for financial advice, you need to seek the advice of a professional. So take a few minutes and read this, and we'll get on with it. All right, and we're back, and welcome to our screen here, or our chart. As you can see, we have a blank slate. What I'll do is I'll go ahead and remember the Heiken Ash candles that we discussed in series or video number 1. If you're not familiar with the Heiken Ash candles, please go back and review that video so you can understand our trading strategy. Okay. Also, video number 2 is in reference to how we use the Bollinger Bands and deviation. So that's not going to be on this video here. This video is in it to introduce you to the next instrument that we use to gain a trading advantage on the charts. So I'm going to go ahead and I'm going to take off these Heiken Ash candles. And then there we are again. We are at a blank chart. So what I want to introduce you today is the third instrument that we use in reference to our trading strategy, and that would be the Keltner Channels. Now, if you know anything about the Keltner Channels, they are a popular technical indicator that day traders use. They show volatility, and they provide information in reference to the current trend. The channels use volatility and average prices to plot upper, lower, and middle lines. So you could say the upper line would be resistance, and the lower line on the Keltner channel would be support. So let's take a look at that. Okay, so this is the Keltner channel. Now, when you first set this up, what you're going to do in reference to, if you're trading in our system, what you need to do is you need to come in here, you need to go to settings, and you need to, I believe the default is, what was it? Yeah, 3 maybe. But anyway, I'm not quite sure what the default is. But what I want to make sure that if you're using our trading strategies and system, you need to change this multiplier. See, as you can see, as it goes up, it gets bigger. Okay, and we want it at 2. So multiplier set at 2, and this is on the inputs. And actually, if you're using our script, this is all set up for you in trading view. It's all done. You don't have to do anything but set up our charts on your system. So let's go back here. I want you to make sure that there's a check mark and an exponential, and I want the band style to be true range, average true range. Okay, and as you can see, then we can go to style. You can change it to any color that you want. the basis, which would be that this is the middle band or line. You can change it to any color. Like I said, we just pretty much leave ours all at blue. Therefore, we recognize them quick. Okay, so that's the Keltner channels. Now, what are the Keltner channels? We've discussed that they use volatility and average price ranges. They show the trend as well. So, just a little bit about them. They've been around since like the 60s. So building on that, we do use the Keltner channels and the Bollinger Bands, and both of them have been around for quite some time. I guess the best analogy that I can use in reference to them is, why fix something that's not broken? They've been around so long. They have been revamped. Actually, the Keltner channels, I believe, were revamped in 1980, and this is the system that we're using now, or everybody is using now in reference to this revamped Keltner instrument. So anyway, so they've been around for quite some time, like I said, since the 60s, and so have the Bollinger Bands, but there's a reason why. It's because they work. I know that all the online gurus are preaching all the newest, hottest indicators out there, and I call them instruments, and instruments to me are tools, and that's all they are, is tools in our toolbox. Okay, so anyway, so like I said, they've been around that long. So now, how do they work? Well, let's take a look at that. Okay, so like I said, the middle band is the moving period, and the default is 21, and we're going to leave it at that. The upper band is an average true range, which measures volatility, and the lower band is an average true range as well, and it measures okay, sorry about that. Trying to get over a cold. It is January and all this nasty crap's going around. So back to what we were discussing was the upper and the lower band, which are show volatility, and for our purposes, to us, it shows support and resistance. Okay, so here's how they are calculated for all you math gurus out there. The true range for any given period, and so this would be we're using the 3-minute chart right now. Sometimes we use a 3, sometimes we use 5, sometimes we use 15. But right now I'm just showing this on the 3-minute chart. So it would be, here's how it's calculated for the 3 period for this chart in front of us. It would be the current high minus the current low, the absolute value of the current high minus the previous close, or the absolute value of the current low minus the previous close. The average true range is then a moving average generated over 14 periods of true ranges. So, if you understood that, great. The only thing that we need to know is that for our purposes is that the upper line, we're looking for resistance, and also it shows trend, price, direction, and the lower band or line, whichever you prefer to call it, is showing support for our purposes and our trading strategy. I'm going to show you why. Okay, so the upper band is the ATR times a multiplier, and that multiplier we set at 2 when we first set it up. And the lower band is the ATR times the multiplier. Now, what I did not mention to you was that it's so the upper, the calculation is a moving average, and the bottom is a moving average times the average true range. Now, if you understood that, great. Now, if you didn't, that's okay too. All I want you to understand or go on is that the upper band shows us resistance and the lower band shows us support, and the middle band or middle band line, whatever you want to call it, is like a magnet. A magnet. Price always wants to come back to that middle band, whether it's at resistance or whether it's at support. That is all you really need to remember to use this as part of in our system and our strategy. Okay, so support and resistance, and the middle line is like a magnet for price. Now I'm going to show you exactly what I'm talking about. All I'm going to do is I'm going to change. This is how I have to do this to blank everything out. I'm going to go here. I'm going to bring back up the Keltner candles. Now, as you can see, they follow it pretty well, and this is on a 3-minute chart. Oh, hold on there. Okay, price follows the Keltner channels pretty well, right? Which, as you can see, the upper band is resistance and comes right back down to that middle. Okay, to that middle band. Magnet. What does it do after that? Comes right back up. So this tells me that we're in an uptrend right here. Okay, so if your Keltners are going sideways, this came down, and actually let's go back here. Let's take a look at this one here. I'm gonna blow that up just a little bit so I can just show you in the opposite direction. So see, we price comes down, comes right back up to that middle band. Magnet. Down, back up. Magnet. Down, back up. Magnet. So we can see the price is in a downtrend right here in our time frame. So price is in a downtrend. Price starts going sideways, and the trend changes for our time frame. Remember that, for our time frame. If you want to see what price is doing on a bigger scale, you need to change your time frame. But what I want you to see and understand right now in front of you is that price follows the Keltners at our settings for our strategy. And this is what you need to take away today, is that you need to get those settings right, and you need to realize that when it's in a trend, comes back, bounces right off that middle line, okay? And then this is sideways or chop or consolidation. So when we have a lot of consolidation going on right here, there's a lot of contracts right in this area. And when those contracts are all exhausted, the market's going to make its next move. It's supposed to. Now, and you know as well as I do that the market will do whatever the market wants to do. And this is just another instrument or a tool in our toolbox. Okay? So everybody that saw the previous video in reference to the Bollinger Bands knows that the Bollinger Band would be running about right up in this area. Actually, I could draw that, but actually, I'm going to show you really fast. So I'm gonna go ahead and load them Bollinger Bands. Okay. So the Bollinger Bands actually are running right there, but let's take a look at the settings on them. Hang tight. So the settings on the input. Okay. So we'll just go a standard deviation of 3, which means that there's a 97% chance, like I said before, the price is going to stay within those lines. Okay. Excuse me. Move it down at a 2 deviation. See, this is a whole different level This is a whole different tool that we look at that we discussed earlier. I just wanted to show you that where price usually follows our lines in our instruments. Okay, that's what I wanted you to see today. Actually, I don't like that. How that's even good. I don't know. Let's see. Unless what here. Let's just change that to a 1 minute chart. How does that look on a 1 minute chart? Okay, so then let's just look at them Bollingers on it. Okay, that's more like it. So, like I said, the Bollingers 2 deviation. Okay, so the market's pretty tight, right? So we know when it all squeezes together, the market's tight. Okay, there's not a lot of volatility in the market. But anyhow, so what I wanted to show you is the Bollingers pretty much follow those Keltners. I'm going to take those away. But as you can see on the 1 minute chart, the price follows the Keltner. So we have resistance, 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 and then we break the middle band. Now we have support, right? So just another tool for your toolbox, an instrument that we use. Actually, let's see if I can blow that up for you. And okay, so that's what I wanted you to see. I want you to understand the Keltner channels, practice with them, use them on demo first, ladies and gentlemen, and definitely demo. Everything that we do, you need to be demoing before you go on a live chart or a live trade. Okay, so with that, let's just take a look at the 15-minute chart. Now, it's going to be distorted, but I will put it into retrospect for you. So now, like I said, on a 15-minute chart, you can see that we are in a downtrend right here. And as you can see, it pretty much follows the price, pretty much follows the Keltner, or vice versa. The Keltner follows price. It all moves in unison. Okay, so as you can see, we finally broke that, and as the trend is changing, your Keltners are all changing the slope. See the slope here? It's about a 45-degree angle, right? So that's a good slope. Okay, so that's what I wanted you to see today. What I want you to understand. Make sure that you watch this, practice it on demo like I said. We will do another video next week, building on our charts so you can understand them and what all the instruments that we use mean completely. So make sure you watch that. Watch this, and as always, if you have any questions, please let us know. Now, we are gearing up to start trading the Asian session. The Asian session is we've been announcing in our group, and we have announced it officially on our Facebook group page. That will begin February the 4th. So make sure that you are watching. We'll start at around 7 o'clock Eastern Standard Time, and depending on market conditions, we're going to go till 9 or maybe even 10 Eastern Standard Time. So get prepared for that. Study, 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 and as with always, trade positive and God bless.